Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Don Kaufman, co-founder of TheoTrade. Don and Rick, it's good to see both of you. Don, I want to get your big picture take on the market today. We're churning higher. We've got the economy firing on all cylinders, largely, I should say, in terms of the latest economic data. What's your viewpoint?
Yeah, to start with, it's very tough for the administration and or the Fed to take a stance right now that they should be cutting interest rates. I mean, today's data was clear, it was concise, and I'm actually rather surprised how well the markets overall are taking that. Again, probability of some rate cuts in the future are diminishing right now.
All right, let's talk about the first trade on your list. You've got Netflix on your list. It's been an outperformer year to date, but how long can this momentum hold up? So where do you take it from here, Don?
That's exactly my point in here. How long can the momentum hold up? And right now, it does appear the decline has begun. Some sell-side activity in here. So we traded as high as 1341. And when we came off that 1341, that trend reversal has been fairly significant. Look, at this point, I'm not all bared up in here. I'm just hopping on trend, and it does look like it's the beginning of a trend. As such, I'm going to take a bearish position inside of Netflix, but going all the way out to the October 17th expiration. And I'm going to give myself the benefit of that duration in this trade to look for Netflix to cross literally to 1100. The trade itself, the OX17 expiration, again, OX17, I'm going to be buying, the 1110 puts. Again, buying the 1110 puts, selling the 1100 puts. So it's a $10 wide put spread done for a $3.33 debit. It's big, it's bearish, it's lovely if you are on the bearish side, trend following right now inside of Netflix.
All right, Rick, take us through what you noticed about the chart. I mean, Don makes a great point. This is all about the trend right now. What do you notice in the patterns?
Yeah, sure. And it seems like Netflix is at one of those inflection point type of areas where there's the potential for a downside breakout here. What I mean by that is 1160, our green line here. This was an old high point here. We topped out around that same area twice. Now it's where price is kind of consolidating and moving a little bit sideways here. So 1160 could be that breakdown point potentially here. Price also moving downward in a relatively narrow, tight channel type shape here between our two white dashed lines. We've crossed below our two moving averages, yellow 21-day, orange 63-day exponential moving averages. They're both starting to turn downward to sideways as well. These are signs of impending trend shift here. The longer term the moving average, it's more significant when it crosses and changes its slope. We can also see, if you were to think more literally in terms of momentum, RSI has been trending down for quite a while since those highs here. We are below the 50 midline. There's potential to break out above that red trend line here, but we would still be looking for a crossover above that 50 level for more of a bullish shift here. To consider some other levels here of interest, we can look at our volume profile study. We can see here that this area, there's a volume node here around perhaps 1190 to like 1220 or so. That also holds our moving averages as well. So that's an upside area to watch. But then to talk about Don's trade, he mentioned that 1100 level. That's the same level I had my eye on here as a notable low point. This was a couple of lows. That's also where the volume really drops off quite sharply here. That would be another of these kind of make or break type points.
Okay, all right, Don, I'm going to move on to your next trade. You've got Citigroup on your list. Like many in the financials, it's been an outperformer year to date. But where does this trend take you?
Yeah, this trend right now, this is wild to the upside. What else can you say about Citi? You got to recognize this is 70% move off of those April lows, 70% straight up. There's been almost no pullback. And one of the things Rick is actually going to show here in a moment is probably the RSI, which is incredibly overbought, starting to actually roll over right now. And I'm going to go for it. I'm actually going to go for it over here. Look, I think that the price action in Citi is stalling out right now. It's ripe for the pluck, and I think we're going to see some sell-side activity in the product in the very near future. Look, I'm not all bared up with no place to go here in Citi. I'm actually going to take a little bit of a shorter duration bearish position here. I'm going to go out to the August 29th expiration again, August 29 expiration. I'm going to be buying the 94 puts, selling the 89 puts. So it's just a $5 wide put spread. This one's done for $1.50 debit. I like to take these shots, especially when an underlying is kind of stalling out. Look, somebody's got to be the first one over the wall. And in my case, I'm going right through it. Yeah, I am stepping in the way of what has been a freight train to the upside.
Okay, so potential stepping in the way of a freight train here. Rick, what do you notice about this chart for Citigroup?
I guess just first, the general thought is that, those very one-sided areas can have very lucrative opportunities if it does play out, the way that that doesn't exactly fit that consensus here. And in this case, to kind of speak more specifically, momentum has been slowing down here. We can see the RSI has been trending downward here, showing bearish divergence, price making new closing highs, RSI making lower highs here. Not typically what you want to see here when things are getting stretched out here. We are hanging out above this green trend line here. We are still in the overbought area here, but this would be one of those other situations where, we're not trying to predict the future. We're not saying this is going to happen, but we're saying just very quantifiably, momentum's slowing down. The pace of the gains is not accelerating really anymore. It's winding down somewhat here. So now we can see here an important areas during our climb to the upside. 85 was an old high point here. That was about where we had our breakout point, and we didn't quite retest that area, but that one sticks out. Same thing here, that 89 level retested and continued on. Now, if you were to think about it as well, we had like bull pennant, bull flag type shapes here, these consolidated phases. What you would hope if you're bullish would be a push above that 96, 97 level. What you would think if this was a breakdown point would be a retreat further down, perhaps to like that 89 level that we mentioned here. If you were to also assess our volume nodes, not really too terribly much help in this case here. The best we can do is see that there's some heavy trading at these current levels down here near 85 as well. Matches up with those old high points.
Okay, Don, a quick thought from you on, since you're kind of stepping in the way of what's been a trend recently, what's the preparation for if this doesn't go the way you expect it?
Well, the nice thing is it's a $5 wide spread. I'm paying $1.50 for. So, the risk reward in here is absolutely phenomenal. No stop order, none of the kind. I mean, when you've got $1.50 at risk, your risk management is effectively taken care of. It's one of the primary reasons that I use these types of spreads. But, I'm actually looking at this trade specifically today inside of financials because I don't necessarily think the financials are going to like what Jerome Powell has to say. And that could actually have a broader impact on most of the financials, the XLF included.
All right, and let's talk about the final trade on your list. That's Nike. Look, Nike has had a lot of challenges. Year to date, it's barely above the flat line. So where do you take this trade from here, Don?
So completely anecdotal, but I actually chose this trade because I bought some Nikes earlier this week. I haven't done that in a long time. Strictly online because they don't have a Nike store. I'm down in the Eastern Caribbean over here. My on-cloud's completely melted basically because of the heat down here. So I'm back to Nike. And I was looking at the underlying simply because I was thinking about Nike. Anyway, 80. 80 has actually been some long-term resistance, as Rick is actually going to bring up in the chart here in just a moment. And if this thing can get above 80, I think it's got legs to the upside. And that literally is a trade unto itself. I'm also going to use a nice, call spread in here, bullish call spread for the risk reward. So I'm going all the way out to the September 19th expiration. Here's another one where I've got to buy myself a little bit of duration. I'm not sure I'm going to be right immediately, but I think if it can get above 80, as I said, it's going to have legs. So SEP 19, I'm going to buy the 80 calls. I'm going to buy the 80 calls, sell the 85 calls against it. So it's a $5 wide call spread done for a $1.18 debit.
Okay, all right. Rick, take us through what you noticed about the patterns in this chart for Nike.
Yeah, for sure. I mean, 81 is the level that I actually marked on my chart, but 80, 81 is extremely similar territory, especially if you were considering not even like stock price, but like strike prices. That's pretty much the same area here. But to backtrack, the reason I picked it, it was the low after this gap, low points here, high points here. Once again, had trouble breaking above there. Now we're approaching that 80, 81 level once again here. And there are some other signs that are rather interesting. We can see that a long-term downtrend begins beginning with those highs, our blue line here. We did test it to the upside. Now we've seemed like we have broken above it here. We have also pushed above this 74 level, a brief series of highs there before we had a gap downward there. That gives us a boundary to watch as well because it lines up with our trend line and our moving averages here. 74 all aligned in that same spot to the downside. That's a notable downside area. We saw, once again here, some bearish divergence on the RSI. Still holding up okay, though, still in bullish territory, still trend line is intact here. And it's kind of interesting right now because if you were considering a bullish play in Nike here, we're getting a bit of a pullback below our trend line and we're filling this gap right now. If you were thinking in terms of gaps, you know, the gaps often get filled, then what you would hope if you were bullish would be that we would continue on up to the upside once again here. So this is perhaps a potential opportunity in this area. Not saying you should or should not do it, just pointing out what I see. And volume profile point of control, 77, right around where we are now. So this would be a key area to hold between like 77 to 78 or so.
Okay, all right. Don, I'll give you the floor. Any final thoughts on Nike?
Not specifically on Nike, but the market as a whole right now, we're at a critical inflection point. I mean, this week, specifically today, obviously there's the Fed earnings in scope. There's a lot of volatility actually priced into this marketplace, and we're again, I think, ripe to see the lows of volatility just basically happen, possibly yesterday. Look for volatility overall to start to pick up as we turn the corner in summer, start to head into August.
Okay, well, you're echoing the comments we heard from our very own Omar Aguilar earlier today, expecting some more volatility in the second half. All right, thank you. That's Don Kaufman of TheoTrade and our own lead market technician, Rick Ducat.